So hello. So today is September 4th, 2021. So the markets are at our all-time highs, and there's so many doom and gloom videos, which is strange. So let's look into this. Why is that? Well, we have the crash is coming. This guy, David Hunter, which I've never heard of before, he's saying that there's going to be a massive 80% stock market crash. We're going back to the levels we saw in the Great Recession about 12 years ago. This one is talking about a 70% property value drop. Well, yes, some of the shopping mall centers are not doing well, but it's not all commercial real estate. In this video, they're talking about the biggest stock market crash in world history is coming. When? I don't know, but it's coming, and it's going to be greater than the Great Depression. And panic and chaos sweeps across the supply chains as shortages of everything push prices to skyrocket. We know there's inflation, but where I go, all the shelves are full, but the prices are up. So I don't think that we're going to starve. We're just going to pay more for our food. And of course, if you're in the housing market, well, there's an 80% housing market crash when stimulus is removed, the Great Depression levels. So if you're thinking of buying $1 million house, just wait. You're going to pick it up for basically $200,000, which is wonderful. They're going to be giving houses away. This was 7 months ago, another one 2 years ago. So there's going to be a big housing crash. You're going to get houses for bargain basement prices, even though there's shortages of housing and rents are higher. But that's beside the point. So there's going to be a big, huge housing market crash in Australia, US, Canada. It's crashes everywhere. The stock markets are going to crash everywhere. It's doom and gloom. It's the end of the world, Great Depression, you name it, we're there. Okay, so who are these guys? Like, seriously, who are these guys, these supposedly experts? They're talking about big crashes and doom and gloom and the Great Depression and etc., etc. Like, who are they? What is their expertise? Are they really in the markets? If they're not in the markets, what are they doing? And if they don't own houses because it's a bad, well, then where do they live? So these are the questions that I'm asking, is like, who are they and what's their expertise? So what's happening now? Well, all the bad news, it's known in the markets. If you focus on the bad news, then you'll find whatever you want because there's so much bad news. But instead, they're not focusing on the profitable areas, those areas that are doing well, where there's profits to be made. Let's look at that. That's where you make money. You don't make money looking at negative things. So this is a table that I created, and it's very indicative of what's happening. Corporate profits in the United States jumped 9.7% to a record high of US dollars 2.4 trillion. That's trillion dollars, not billions. This was in the second quarter of 2021. There are record profits. That's why the markets are at record highs. Simple. And keep in mind your domestic product, or GDP, increased by an annual rate of 6.6% in the second quarter of 2021. So we have record GDP, record profits. So that's why the markets are up, up, up. And that's really all that is. It's simple as that. So consumer prices have jumped by 5.4%. Now, possibly temporary, maybe not. The point is, it is 5%. Consumer prices are up, and we have to live with that. And you have to invest in this kind of market. So there's rising inflation. And I'm not telling you anything you don't know. Food prices are up. Cost of living is up. Cash interest rates are down. What other choice do you have to do? What are you going to do with your money? I mean, interest rates are pitiful and the markets are up. What do you do? Well, here are your best savings accounts. These are money market rates of 0.7, 0.6. What are you going to do with that? With inflation at 5%, you're losing money. And even leaving your money there, it's depreciating on a regular basis. Every year, your money is depreciating in terms of its purchasing power. So what do? How are you going to fund your retirement? How are you going to live off of your investments or your savings? And how are pension plans going to make money to pay for all these pensions? They have to invest. They have to do something. Everybody's got to do something. The choice is to survive in today's economy with today's reality. It's not just, well, stay out. It's like food prices are up. Well, stop buying food. That's not realistic. It's the same thing. Your markets are up. Well, stay out of the markets. Good. Well, then what's your alternative? What are the alternatives that you have to the markets, to not invest, to not get extra income? What's the alternative? Well, U.S. Treasuries, let's look at interest rates. These are 10-year Treasuries. So 10 years down here, it's at 1.3%. It's maybe 1.35, but that's 10 years, and you can see the rest of the rates. Well, those are lousy. I'm going to go elsewhere. Fine, go to Europe. They're no better. And, well, I'll go to Asia. I'll go to Japan. They're no better. If you look at all these rates for the 10-year government bonds, they're pitiful and they're low everywhere. So you don't have much choice to move around because no matter where you go, it's the same thing. Just like food prices are up. They're up everywhere. This is a table of various funds. These are portfolios that are listed on the stock exchange. And you can get 14%, 10%, 9%, 8%. This is one of several pages. They're paying 4, 5, 6, 7, 8%. Many of them. So there's other alternatives for your money to get a regular income, and you don't have to go in money markets, and they are out there. So a lot of people are investing for income, and it's possible. So the unemployment rate is at 5.4%, so it's improving over time. So the market is forward-looking. Where are we going to be in 6 months, a year, 2 years? That's what the market is investing in. Theoretically, they're looking at February 2022. So if you're looking for the forward-looking, that's where you're going to make your money. If you're going to be investing in the past, where the markets were in 2020 or where they are even today, you're missing it because you have to look at where we're going to be and not where we are right now. So this is the Dow over the last 10 years. So as you can see, there was a crash here and a crash here. What does that mean? That means that whenever you get a big, huge drop like this, it's an opportunity of a lifetime. They come by once every 10 years or so, and the markets are always up. Now, here we are in 2012. The market's not fully recovered, but mostly recovered. If you would have bought at the bottom, and because when it's doom and gloom and it's black as hell, that's when you're going to make your money. All throughout this period, people were saying the market is overvalued, get out. There's been a correction. Oh, get out. Get out here. Get out here. The market is overvalued. There's going to be another crash. It's the end of the world. By getting out even at the tops here, you missed all this. Well, get out. Get out. It's the crash is coming. Sky's falling. You get out even at here, at this high point, you missed all this. Now we've had a big crash. The markets are up. Get out. It's no good. So here's the Dow Jones Industrial again. It went up 91% since July 2016. People all throughout this period where it crashed, be careful. Okay, but if you stayed in, you got your dividends. If you had your dividend-paying portfolios, they paid you. You're getting paid while you wait. So you get paid while you wait. Yes, there's a crash, a correction, well, whatever you want to call it. And now look at that. It's gone to all-time highs. So here we are again. This is now showing you that in the past year, 24%. You're not going to make 24% going forward. I don't really think that's going to happen. I think you might make 7 or 8% on the Dow. But that's pretty good, and you add in your dividends. So the point is, that's the reality. So here we are on the 16th of December. People were saying, get out. It's overvalued. A crash is coming. Okay. So how much money did you make by not buying the market, by not getting in and listening to the doom and gloom guys? If you sold here, you took profits, but if you didn't get in, you missed profits. All throughout this period, it's doom and gloom, get out, the market's overvalued, the crash is coming, the crash is coming. Okay, it's flattening out here, but we are at record highs. The markets are going to do what they're going to do. If you're in there for the shorter term, fine. Then you're a day trader. But if you're in there for the longer term, putting the money away for your retirement and whatever, this is the best thing to do. Keep in mind, a modest majority of Americans, some 55% own stocks. So 55% of the population is about 180 million people. These are the ones who are moving the markets, investing. These are pension plans, people, hedge funds, you name it, investment pools. They're the ones who are moving the market. Everybody's focused on the poverty, the problems, the people who are not investing, starving, whatever. They're not the ones who are buying the markets. So you have a separate economy, the tale of two economies. So here's the deal. Interest rates are the lowest in 40 years. That's a fact. And trillions of stimulus and cash available. A lot of the trillions are sitting around. They're not totally moving in the economy. They will soon. Things are starting to pick up. There's trillions out there, and maybe trillions more coming with budget deficits and all sorts of government programs. So you have an improving economy going forward and increasing profits. That's the bottom line. So the economy is improving slowly, no other choices. I've talked to some friends who have stores in shopping malls, and they say things are improving, things are getting better. I went to downtown in the city that I live in. Things are improving, getting better, more people are coming out. The office towers are starting to return to normal. It's starting, it's improving. That's what you want to buy. You're buying the future, not the past. Nobody's ever made any money investing in the past. It's investing in the future. Keep in mind this table here of record profits and the GDP growth. Where will we be in the third quarter? Those numbers will be coming in about, a month or so, a little over a month. What happens if we have more record profits and the GDP growth, even if it slows down to 3.5% in a quarter, that's still very good. So there's a help wanted. There's over 10 million job openings in the U.S. That's fantastic. They're not all being filled. We know that. But they are there. So that means that there's a potential for the economy. So what does Jim Cramer have to say? What is he saying right now?
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends? I'm just trying to make you money. My job is not just to entertain, but educate, teach, put in context. Call me. 1-800-743-CNBC. Or tweet me at Jim Cramer. Look, I'm trying to be Jimmy Chill. But I keep seeing people say the dumbest things, and it is beginning to drive me nuts! This morning, it was some analyst talking about how you can track every move in this market by watching the Fed and the money supply. I don't know whether to laugh or cry. Tears of a clown. After Sedate Day, where the Dow edged up 39 points, S&P gained 0.22%, record close. Nasdaq advanced 0.15%, also two-notch a record close. This whole notion of the Fed as Grand Inquisitor is so out of touch with reality, with the trench warfare of the moment. You know what? Makes me want to gag. You don't want to see that. Forget the big picture stuff. There are two things you need to keep track of when you're picking stocks right now: the sector and the company, which includes the people running. You want sectors that are in bull market mode. And while following the Fed can help, it's telling you a small portion of the story. You want to stay away from underperforming groups and battlegrounds and just go with what is working. Bye.
Well, he's been in the markets for a while, and he says there are bull markets somewhere, and he's absolutely right. So if you look at, there's a 1.46 billion shares each day traded on the New York Stock Exchange, with some 2,800 different stocks. And if you include the NASDAQ, you're over 4,000. So somewhere in there, in those 4,000 shares, there's something to buy. There's something good to look at. So, as he says, stop worrying about the Fed. Everybody's worrying about the Fed. What are they going to do? They're going to have to raise rates by 2-3%. They may only raise them for now at 0.25 or 0.5, not 5. That'll cause a big crash, and that's not what they're doing. That's not what they want. So stop worrying about the Fed. I've seen people, and Jim Cramer is absolutely right. People have been worrying about the Fed for years and years, and they're going nowhere. Stop worrying. The Fed will do what it'll have to do, and we'll see and react to when they do something. Now, what does he say also? Sectors and companies, that's what you should be looking at. Buy those in bull market mode, stay away from underperforming groups and sectors, and go with what is working. And that makes a lot of sense. It's very simplistic, but it makes sense, and that's what you do. Where are you making money? What's profitable? What's doing well? What's paying me my dividends consistently so that I can live on? That's what you want to look at. Not the whole market is overvalued and everything is going to crash and everything is going to go into... Not everything. Some sectors are different, some are better. So you got to pick and choose. Just like in real estate, you pick and choose your markets. So a pullback, a correction, a slowdown, a drop is not a crash. A lot of people are using the word crash, which is very dramatic, very heavy. We're not going through crashes, but pullbacks and corrections, that happens regularly. That's like the weather. It rains sometimes. Start, getting back into the market. Start looking for the longer term. So, a lot of people are buying ETFs, exchange-traded funds, portfolios, professionally managed for growth and income. Not everybody wants to buy individual stocks or make all those decisions. They buy ETFs with sectors or even income. There's nothing wrong with getting 8%, on a yearly basis paid monthly. There's no problem there. So this is the thing that people have to look at. And that's how their markets can go up, as people want growth and income. So you have to do something. You just can't sit there and wait for the perfect timing when everything is just going to be perfect, because please leave a comment. When is it perfect? When's the perfect time to invest in the markets? So are you making money? And I guess this is the $1 million question. Are you making money listening to all the doom and gloom guys who've kept you out of the market? Please comment. How much money have you really made listening to these people? And how did they help you? Because that's the bottom line. Are you making money? If you're not, it's maybe time to change strategies and to start thinking longer term. So these are the reasons why the markets are going to go higher over time. And this is what I believe in. This is what my experience has taught me. So we'll see what happens. So hopefully you enjoyed the video, and please like it. And if you wish, please subscribe to the channel. In the future, I'm going to be making more videos on this topic of why the markets are probably going to go higher and various strategies on how to make money. Again, I've been in the markets for over 40 years as a financial planner and an investment advisor. And I'm going to be sharing my 40 years experience with you and making videos on that. And hopefully they will be helpful to you. So thank you very much, and I will see you next time.